What's up, guys? What's going on? Let me just turn the music off. What's going on? What is going on? It's 6:25 p.m. New York time. Just give me a sound check when you get a chance. Make sure everything is good. Cool. Got the chat out. Have a couple people in here. Well, more than a couple, but it's still a holiday. Still a holiday here in the United States. Well, it's not the 4th of July, but the day after. Monday, everything's pretty much, it's considered a holiday. Markets are closed still. Hopefully everyone is taking advantage of nice weather. Smells like everyone's barbecuing in our neighborhood. All good, all good, cool. All right, Jared, Sir Phytone, Diego, Sam. What's up, Matt? All right, cool. What's going on, guys? Just gonna do a quick stream, and I say quick, because my normal streams are like 2 hours long. But hopefully, we'll keep this around an hour. Talk about BTC. Talk about DeFi, ETH. Just go over some charts. Nothing. Nothing over the top. Not gonna have the trading setup like the other streams. Just doesn't seem like there's really a whole lot going on. So I think it's a good time just to look over everything and make plans, right? Right now it's really shitty, right? Low volumes, thin market, still technically holiday weekend, right? Markets don't open again till tomorrow. At least the equities markets don't. But yeah, it's pretty crappy conditions. So I think it's a good time to go over some, we'll say, some educational details. Your stream's good when in silico recommending. Oh, cool. That's nice. Yeah, in silico is good dude. Good dude. Either you love him or you hate him. Seems like he catches a lot of heat lately, but it's because he calls it like it is. And I think that his European personality might be abrasive to some, but I don't know. I've never had a problem with him. He's always been a great follow. Very very informative, knows his stuff. So that's good to know. All right, so for those of you that are new, my name is Ryan, aka Cantering Clark. If you're not already subscribed to the BlockRoots YouTube channel, go ahead and hit the subscribe button, hit the like button, yada, 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 all that bullshit. Just as a reminder, none of this is to be taken as financial advice. This is strictly for entertainment purposes only. And we are brought to you by and sponsored by Phemex. So Phemex Exchange, they offer spot, they offer contracts, they offer a bunch of DeFi contracts now, and they still have a generous yield. So if you deposit up to 1.5 million USDT, you can earn flexible yield of 7 to 10%. You just have to keep that locked up for the 10%. I believe it's 7 days. So yep. All right. There's a lot of stuff going on lately with exchanges, and most exchanges are going to be implementing some form of KYC. So Phemex has if you elect to do KYC, you get like a reduced trading fee structure. There's no limit yet on what you can withdraw. Bybit has recently implemented that. Binance has had a 2 BTC limit. FTX, if anyone trades on FTX and you're not KYC, it's 9K a day. And that's, you have to make sure that you trade a certain amount of volume to qualify for that. It's not much. You can just do a bunch of round trips even if you don't trade a lot of volume to begin with. But most exchanges will be implementing some form of restrictions when it comes to, onboarding, or rather not onboarding, but mostly offboarding. So withdrawing from the exchange. But Phemex hasn't done that yet. And they've always been a great partner, and they have the fastest execution. So, all right. So for those of you that are new, welcome. Majin recommended me to you. Cool. The infamous bear. So we're gonna go over BTC. I've been messing around on the low time frames because the only times that I'm really getting screwed, and not really screwed, but I'm literally getting into swing positions with the intention of, further targets. These are not scalps, and I'm getting out like around my entry. I've done this probably like 4 or 5 times, just because I think that I'm trying to be positioned spot wise, and making the same mistakes that a lot of people make, and getting pre-positioned, anticipating a break, and we're still within a range. So I'm really just kind of like, I think it's a matter of boredom. And as I said, I had a good exit from the highs between February and March. I took out a good amount, and then on the breakdown, I completely exited spot, and I hadn't got back in a spot compared to what I was into previously. And I went over why I sold. Even though I have long-term beliefs that BTC is going to continue to go up, I had achieved the long-term capital gain status. So I figured, what the hell? And that was a good decision to make by selling my spot, because I avoided the second leg of the dump. And my average exit price was pretty damn attractive. But, I'm getting chopped up too with some of these swings, and it just reminds me, like, why the fuck am I even getting in position for any swings? I'm getting in good locations, but I think it's the mental aspect. I'm not getting stopped out. It's kind of like coming back to my entry. And, yesterday I added on the rest of an order that I started. I added it on at market. I was confident. And then, the market retraced back to the point where I'm essentially considering getting out of break even, right? So it's almost like, I see that we're in a range, and I'm making the same mistakes I'm telling everybody else not to make. Thankfully, it's not costing me, but it's a reminder just to focus on the low time frames and scalping. And even that, I have to remind myself to size down compared to what I would normally trade, because the conditions aren't really, they are not really appropriate for what I was trading previously. So I'm trying to experiment on the low time frames, because in this sort of crab market, I'll trade off of TPOs. I'll establish structure, context with TPOs, traditional market structure. But then I'm also trying to get a feel for what the sort of rhythm or cadence is, and, what the market's expected range of behavior is when it's chopping. So I've been experimenting with things like the stock RSI, implementing that with a mean inversion strategy. And I was using the VWAP with standard deviation bands. That was useful, but I found that I was still taking the same trades I would have taken period without that tool, with just price action alone, price action footprint, and looking at the tape. And now I'm trying out Cuban's reversion bands. I actually really like them. And this is something that I'll do if the market is really doing nothing and I'm not trading a whole lot, period. Because that's one thing, I'm taking a few trades on the long side. I took a few trades looking for swings. But it's like, when I look at the entire range that we've been in, I might have gotten in position just a handful of times, right? Barely trading compared to what I was trading during the major run up, during the range high. Barely trading, I guess, a larger breadth of strategy. So on the way up at the high, I was still swing trading, still in positional trades, and then scalping. And now it's like, what I'm doing is taking just two types of trades, and one of them is failing, obviously, and it really makes me focus on, or rather, it's incentivizing me or inspiring me to focus on a low time frame. And the Cuban reversion bands they're kind of like what I was doing with the VWAP with the standard deviation bands, but I think that these are a little bit more useful on the lower time frames, just from what I'm finding so far. And I'm just experimenting, right? When you have the free time and the market's not doing shit, this is when you experiment. So that's what you're looking at right here. Let's see. Let's go to BTC. So just a quick heads up with BTC. We just closed out the monthly. Looking at this monthly candle right now, we're referencing it is, asinine at this point. We have 26 days left in the monthly. No, Dave, I haven't used Insilico's adaptive Bollinger Bands. I use his Hull suite for swing trades from time to time. I'll pay attention to that. So the Hull suite by Insilico. But no, I haven't used the adaptive Bollinger Bands. Anything like that, Bollinger Bands, let's see, Kelter channels, Donchian channels, reversion bands, VWAP with standard deviations. You could kind of more or less accomplish the same. They're suited for the same task. What I find is that I think that what I'm noticing in just the last week of using them, the Cubans reversion bands, they hold the channel a little bit more accurately, or rather capture the channel a little bit more accurately. And really what I'm trying to do is find something that really captures the crab behavior that we're in right now, because it's not changing, obviously. What's taking place right now is any kind of impulsive move. It might have a secondary impulsive follow through, but mostly everything is coming back to where it originated from. So, as a reminder, you're within a range, mean reversion strategies prevail. So any kind of tool that can really sharpen your approach to trading these kind of conditions is obviously going to be very beneficial. So looking at the monthly right now, we closed out the month of June. There's really not much of a response by bulls down here. There's not much of follow through. Obviously, the bears have been able to be held at this previous weekly range, right? So we'll just put some of these levels on, but there's not really an overwhelming or any presence by bulls whatsoever. The only real presence that we can reference by bulls is obviously the limit order on the other side of this selling, right? So the passive order, which is for the most part keeping our low intact. We're still within a prior weekly range, right? If we're looking at the weekly structure, if we look at the monthly structure, there's really not much on the way up. I'm rarely going to focus on the monthly. But the weekly, it's a bit of a different story. We're back within a prior weekly range. Still, we're going on, 6 weeks into this range now. Rejected at the midpoint. This right now, the one thing that stands out about this weekly is that the weekly has no wick. So the weekly has no wick. And if we look back in Bitcoin's entire history, I want to say that you could probably count it less, it fit it on one hand. The amount of times that the weekly has just been one-sided and not had any kind of high or low put in, right? In this case, we're talking about there's no high put in, right? So where the market opened is where the market left from. And if you're trading any kind of mechanical strategy, you'll see that people will trade based on the daily high being put in, or a daily low being put in, or a 4-hour low or 4-hour high being put in, and relatively close to the time that the candle opens. So the weekly right now has no wick whatsoever. This could very well, the few times that this has happened. So just to give you a heads up where we sit within this weekly structure, right now we are being rejected at the halfway point. So the 50 fib, right, the 0.5 fib, the 50% retracement or 50% level, the midpoint of this range. We could look at a bunch of things. It's all kind of the same. If we look at the weekly TPO structure, when you composite them or turn it into composite, this is the point of control. So rejected at the midpoint of this range. And the behavior thus far, right, in the first major rotation or series of rotations within this range, covered from low to high, right, back down to low again. So normally when you're playing a range, same as on the low time frames as the high time frames and inverse, if you reaccept back within the range, right, after having a significant move down like this, reaccepting down here again, when you're accepting back into the low of the range, ideally we're looking back at the high. The midpoint of the range is kind of an area where you might add to a position. You might place a stop, move stops at that point. You might manage a trade at that point. But, we've had one rotation, two rotation, third rotation up at the midpoint of this range. And now, this more recent rotation, unable to trade above the previous high. So, I don't want to be bearish when, I like, I guess, poking and prodding on Twitter. But the truth is we're within a range, right? The most important areas within this range now for activity haven't changed, right? The highs and the lows pretty much remain intact. We had considerable deviation down here, but we're back within. The area where you need to see a ton of participation for change to occur would be at the high and the low. That would be, where volume would really matter. But we could begin to, I guess, diagnose strength or weakness based on how price is rotating when it gains acceptance back within compared to prior activity. And right now it's just looking like it's beginning to lose a little bit of steam faster than it did previously, right? Or it has less steam to be able to carry it further up or to the top side of this range. It has less juice in it this time. So that I think is that's something that is worth paying attention to if you're going to look at this range and say that this is the bottom, right? If you're going to remain completely, with this, you're one-sided with a bullish bias, ultimately at some point within the structure, you want to see that there is a strength in price action shown. And, one of the areas that hasn't changed so far, and this was when we were back into this low, is this 36,000 level. And it's the midpoint of the range, but I'm just thinking about when we were back down here, we're talking about being able to just flip the top side of this structure. We talk all the time around the streams. I frequently reference structures like this that break down. A major sign of strength would be trading above and treating that top side as support. So far rotating into that mid and completely unable to do anything that's remotely similar to that. All right, it doesn't mean that it can't happen. It's just, it's looking like bulls are able to continuously, bears, are able to continuously absorb this activity, now lower compared to previously within the structure. It's definitely not looking like bulls are in control, right? I mean, if you're looking at it and you look at it as a range, yes, it is a stalemate, right? Kind of, buyers are most in agreement at the center. We are still stuck within it, so it's still anybody's game. But, evidence right now is indicating that bears are obviously have a little bit more of a presence than bulls, right? Definitely more aggressive than bulls. You're not really seeing any kind of aggression by buyers. But I talked about how, you're not really going to see any kind of aggression by buyers until a major contextual level is reclaimed. And I would say that at this point, whereas up here, the range high and range low, midpoint, there were some obvious defining features within the structure over here that were a little bit further apart. Whereas now it's kind of like we're spending most of the time, if we were gonna break this range up into two, right, midpoint, right, lower portion of the range, higher portion of the range, it kind of looks like you're beginning to form this micro range down here. So if anything, these highs become more significant the more time passes, the more we test them and we're unable to reclaim them. So at this point, it's kind of like, and when we're within a range, we like, the one thing that I say is there, when you're within a range, you're mean reverting, you're rotating from high to low. There's really no breakouts that are worth taking advantage of, or, positioning yourself for a breakout doesn't really make sense unless it's kind of like an intraday breakout and you're, covering a gap, or a small momentum play is presenting itself. There's not really any major breakouts within the range as long as you're within the range, right? The major breakouts are at the extremes, right? These are the areas where things drastically change, right? Conditions drastically change. These are referred to as your, key contextual levels, inflection points, and so forth, high participation zones. This definitely would be, at this point, I would think, now that we've had 1, 2, 3 rotations into it, 3 failures, I think that this would be a high participation zone. Meaning now if we're trading above, 35.5, 36, I think that this is a breakout zone. So if we're able to hold this level, I think that we would see that, if we're able to trade above 36, find support above here, that this would probably move pretty quickly back up to around 38. And I say that because, mind you, this high has been taken, but right now you have likely a good amount of clustering of stops up here, right? So if we look at, just go back to the TV chart, we haven't, this is a lower high right here, right? It's not like we took out this high. So any stops from up here, right? So if you're short and you have stops up here, they haven't been interrupted. Stops now currently obviously have not been taken at all. You haven't been back in that area. And at this point, you have those stops for shorts, right? So this is probably a pretty nice area that we should see acceleration through just from that. And then because of that, because we've had 1, 2, 3 rotations and it's very defined, right? So I think that's the most important thing. It's very defined at this point. You probably have some breakout stops that are going to be accumulating up there as well. So my point being is, and it's kind of like we've been saying the same thing over and over again, like God damn it, can we just find support above this level? Well, if we're asking about that back here, and asking about that back here, and you're looking at, you know, 1, 2, 3 times now that we've rotated into this, the further that we move along and we stay within the structure, each preceding attempt to break, or each following attempt, not preceding, excuse me, to break above there is, I would say, much more likely to be violent and to ultimately, resolve in a move that has a little bit more legs behind it, right? Meaning, resolve. Resolve from the low to the high and have a little bit more legs behind it. It sounded a little funny when I said it. Resolve with a little bit more legs behind it. But we haven't done that yet. So we've failed at the midpoint of the range again. There's no a real attractive area to get into position if you're long, based on where we currently are. One area that, and this is something that I've again gotten flat from, is I talked about this being, if we go back a couple streams ago, 33, being potentially a good long opportunity, right? If we're going to fail here, one more long opportunity here. And just to give you some context, if we zoom out of this structure and we don't just look at, the lows, right, of the range, that weekly level is right here, right? So reaccept back within that prior weekly zone, one more long maybe setting up from here, and we came back to it, right? So I added on market, kind of split I raised the average price in my position and then exited the position, and obviously we dropped a little bit more overnight, so I'm glad I did. But compared to where we sit right now, there's really no compelling long, right? To take this again, I think would be a poor decision. Ultimately, and I would hate to, I think about all the times I say, and take for granted that maybe you don't know. We've had multiple attempts at this low. 2008, the 6K floor, it was kind of unreal how many times that we were able to play that floor. But there could very well be another long down here. And you would need a lot more evidence at this point to take that long. But it could present itself, right? There's really there's no rule book that says you can't have multiple taps at the low before finally ripping to the high. And the lows still are intact, right? Trade the range until something changes. Nothing has changed. But I don't know. I'm a little bit cautious about taking that play. And there's a couple other things maybe that are worth paying attention to too. If we look at something like the 50 moving average, we'll go through the moving averages just to remind everybody where we sit. I think 20 moving average on the weekly is probably one of the most important. We have a ways to get before we get back above that bad boy. And if anything, that would act as dynamic resistance on the way up. That'd be a blessing if we could be able to sell this range low at some point. But I don't know, are we going to have another drop from here before we have any kind of major mean reversion? And I would be betting on that even more. So one thing that people that are new to trading make the mistake of doing is always assuming much more follow through, right? You have a breakdown and then getting super bearish after the move has occurred. So if anything, we look at something like this and we say, well, that's a gap. Like we have to, there's nothing really standing in the way of us and this level down here. But a lot of the times, these gaps set up traps, right? Where you'll have a probe into the gap. You'll kind of like explore it a little bit. Maybe take out these lows over here around, that's right, like right around, 27, maybe tap 28, 27 area. Stall temporarily, and then you have one of those face ripper rallies that, like I said in the last stream, it makes you scratch your head because you think, this would be something where you drop down and then you rip up and you're on the top side of the range and you think, well, we just fought over this range for so long. How the hell were we able to just kind of cut right through it, like a hot knife through butter at that point? But it's because you create such an imbalance down here, because after a move like this, most of the market is going to be a lot more bearish than it already is. But, after a move like that, you'd have to start thinking that statistically, if you're down off the highs at this point, and you're around, let's say, 26, 27, and you're around 60% off the highs and no major meaningful throwback yet, you'd have to start thinking, well, at some point, we're going to, the market doesn't move in just one direction, right? The only time that maybe you would expect the market to move in one direction and you don't really want to fade it is if there's something that's a major macro catalyst, like being the first person to buy the, 10. You could sort of look at, for example, drops and what you can expect in the days following the drops, right? After a 10% down move, after a 20% down move, right? Obviously, when you start getting between 25, 30% pullbacks, right, in terms of how deep they are, at that point, you're starting to explore territory that is not very common, right? You're going to say that if you're 30% into a pullback, like, all right, so am I going to still remain bearish down here? Well, if we have a 60% retracement off the high and we don't have any kind of meaningful bounce back, that's just kind of unheard of, right? So, I still think that we're going to retest the underside of this structure at some point. It's hard to make a case for it doing it just from here, the way that price is behaving. So it's almost like I would expect that maybe you get another move down and then we get this kind of ripper back up to the highs. And it takes, half the amount of time or a quarter amount of time that we spend within this range because it creates such an imbalance. So that's the 20 period above us up there. 50 period right now acting as dynamic resistance. I'm just going over things that I think have been commonly shared recently on Twitter. So, your 50 period moving average, this now catching up with us, this far into the range, this catching up with us, I wouldn't anticipate that we are going to spend too much longer within this range, right? I think that at some point within the next week, we're going to get a big move, right? And it's not nearly as compressed as we've been. We've gotten much more compressed in terms of price action, right? So if we look at, ATR, average true range for each day, we could go all the way back to these levels back here, and it was ridiculously tight. Now, mind you, this is relative to lower prices, right? So the high-low of this in percentage it might be the same as it is up here, right? Just because we have much higher prices at this point. But it's not disgustingly compressed yet. Like 2018 at the end, this is going back into, God, I mean, this was brutal. I think it was October or November. Yeah, this was just the end of October, the beginning of November. That was just brutal. You're like 6 days into it, and there's prices not moving. There's a couple 4-hour candles that they were just dojis right next to each other. It was just absolutely disgusting. So this is not really there yet, but I don't expect that the market is going to hang after a first big move like this for much longer, kind of like hung in suspension. So I think that within the next week, we should expect that. And there's a couple other volatility metrics that we look at. We have the moving average catching up, and the moving average, if the 50 is beginning to flatten out, it's a longer term moving average catching up with price. It's really just it's indicating how long we've been into this sideways, sort of bracketed consolidating period. So I think that we should be expecting that fairly soon. And what that means is, all I'm saying is, I'm not talking about we should expect a breakout. I think that we're going to be revisiting either 30K or 38, 39 within the next week. So that's a high time frames. I mean, again, one thing to focus on, it's a one-sided week so far, right? So no high, no wick. One thing to point out, as I said, though, this is something that's a very infrequent occurrence. The times when this did happen, there were a few times where this did happen, and it was one-sided for the entire week. We didn't put in a high, and it was a gross weekly candle, like a very big move to the downside. So, I don't know if that's going to be the case right here. But again, there's no major resolve on the part of bulls, unless we're just talking about the amount of absorption that's taking place at these lows. And I mean, you could look at the lows, like if we're looking at this down here, there's a bunch of these indicators, and it's showing us the premium or discount. If we look at premium discount, if we look at basis, this one is just basis. If you look at funding right now, it's back in the negative, but it doesn't mean the price has to form a bottom here. It's just something that we really want to start looking for to to add with the evidence of strength in price action to make a case for, a compelling case for a bottom. But the most important thing is, like, we have to start retaking levels that have served to reject us and continuously have. And there's something that's, I think, worth pointing out. It's kind of like within the structure, you have this range up here. Mind you, we do have these lows, but it's tight up here, and now it's looking like almost the same thing is forming beneath the midpoint, right? So I don't know. I'm kind of expecting, and just because price is showing us this, that we do explore these lows again, right? If I was gonna say, it's kind of, it's almost like it's a little bit over a coin flip, but I have a feeling that we're gonna be down here at these lows again, and how price behaves down there, it's anyone's guess. I don't really like to try to think too far outside of a range that we've been stuck within. Let me just go through the chat real quick. So I said last week I hate going over the higher time frame. I really do. I don't know. I've really grown to not care too much for swing trading unless I'm pulled into the market. Like something massive needs to happen. We need to completely obliterate a key level. Like something like this would bring me into the market, right? The problem that I have right now with saying that there are multiple bring me into the market levels within here, meaning put me in a big swing position, is that we're coming off of a year-long plus bull market. So normally I would say, this is absolutely, this reclaim is a buy, but a few times within the structure, I've been hesitant to hold on to things. I guess I'm just a lot more focused on lower time frames now. It's a lot easier to manage mentally when you're staring at, just in my opinion, a tick chart rather than paying attention to the higher time frame chart and trying to trade the low time frames as well. Let me just go through the chat. One sec. Grayscale unlock selling this week. I worry fuel for bears. Yeah, I've seen that come up frequently. I'm not too worried about that as being like a catalyst that's going to move us much lower. I think that since it's been kind of known in advance, there's probably a good amount of selling that has already been represented in the market because that is already known. So, that unlock has, is a material amount of Bitcoin, but I don't think it on its own is going to do too much. I think bears have been fine on their own as far as keeping a lid on price. What level or PA would make you reconsider adding long? I think now at this point, retaking the weekly high. So something like 35.5. It's kind of been the same level, guys. We haven't been able to have a meaningful daily close above it. So that level hasn't changed. Yeah, volatility's down, ATR is down. Just for being a devil's advocate, I kind of like the way the past 2 weeks have developed on the profile. Yeah, let's look at that real quick. Yeah, this is the first time where we've had value migration back to the upside, right? So if we look at these weekly, this is a beautiful range, right? If we look at just how these have transpired, you have multiple value overlap. You had that strong move to the downside, nice dense area that developed, and then the following week, we came back down and retested this point of control. So it's kind of like what you would expect in a strong trending move. You would want for a trend to begin, right? If you're going to say like maybe price is going to begin trending, because, current context is that we are ranging, but let's say price goes on to trend much further up. Are we going to say that the trend began at the break of this, or, the trend might have had its legs at the beginning, at the low, right? So you can start to look for evidence of that, obviously. And one of the things would be, we had value migration to the downside. We reaccepted back within the structure. But if we're looking at this just in isolation, which obviously you shouldn't, you don't want to always do that, obviously, because we've been, we are still within a much larger range. But we came back down, retested this point of control. Now we have back-to-back weeks of value migration. So what I mean by that is just where most of the volume and activity has been able to be lifted over time, right? So, the move to the downside was stifled. But, there hasn't been much presence after the move to the mid. So, ideally, you want to hold, bulls don't want to reaccept into this weekly value area again, right? You want this kind of to be your deviation down here. So I wouldn't want to be trading back below 33. And if we were trading back below 33, I would need to see us kind of attack these lows again to consider getting long, right? Attack these lows and then have kind of some, at this point it's multiple miraculous reclaims, but this top side of the structure is what you want to see hold right now, which is where price currently is. So we'll just zoom in on that just a little bit so you guys can see. So far it's not like it's been destroyed, but this lower high is a little bit concerning. Okay. Yeah, so one thing I talked about, and this is why I kind of like don't give a shit about going over the higher time frame lately. It's because, yeah, we've been within this range the entire time. Like, nothing has changed, so it's kind of redundant to constantly in the stream go over like, oh, okay, guys, this is the, guess what? The midpoint is the area where we want to get involved, and guess what? We failed around there for the third time. So one thing that's really good to do is to set alerts at extremes, obviously, on the way to extremes, and then two, to set alerts on momentum oscillators. And just because you mentioned the RSI, that's something that's useful because for myself, I have a tendency to, if my wife is doing something and I have free time and I'm, not like not occupied, which I will be soon because we're moving and I'll be doing a bunch of stuff in the new house. But I will monitor the chart too much, right? One thing that you can do is set alerts on something like the stock or the RSI at oversold and overbought levels for something like the 4 hour, the 12, the 1 day, and the 1 week. And these are ways of, this is a way for you to step away and then only get involved when you get that alert, right? And we're not at any kind of important level right now, other than the daily RSI having a bullish divergence. But just one thing is the bullish divergence is guaranteed to form, right? In a trending market, if this is the beginning of a bear trend, you're guaranteed to have a bullish divergence if price continues to move in a range after a big move. So this is a lot of momentum. This is not a lot of momentum, right? So this is always going to make a bullish divergence. The same way in a trending market to the upside, like at some point, price is not going to move as fast as it did previously, right? The market would just go vertically at some point if it kept moving at an increased rate of speed. So your momentum oscillators are going to give you that feedback. It doesn't mean that that it has to be a bottom, right? It's common that it ends up being a bottom because what it's showing you is that bears have not been able to, if it's in the case of a bearish divergence, that there's no more activity or not as much activity to the downside, right? So we're beginning to move sideways more than anything else, trend sideways. And yeah, because after a big move, you're likely to mean revert, it would be expected that pre-mean reversion, pre-pullback, even a bullish trend, you're going to have a bearish divergence, right? So it's not something that's prescriptive. It's just present normally. So I don't want to put too much weight on it. Again, the most important thing that I need to see is like we could be really confident if we're trading back above 35 and finally treating a resistance as support. We haven't been able to do that once on the mid to high time frames, right? I mean, the last time that we were able to do that, besides finding support at these lows again, just talking about a strength within the structure is kind of like right. I mean, it's not even that strong. Is right here. Let me just change the ink real quick. Breakdown, consolidation, breakdown, and then you have this pretty weak flip, right? But it holds, right? But it doesn't hold the first time around, right? So these lows right here, we end up breaking down a little bit further, but we retest the midpoint of this range, and price has a little bit more energy and ends up making its way up to the high. We haven't had any kind of strength in price action like that, where we've been able to retake a level. So that is the final piece of evidence that really ties everything together. It's kind of like, okay, yeah, now finally price is able to trade above an area that it has not been able to cover, in however long period of time. Let's see. If the V for on far dated BTC call option changes bullish, it is. So the skew on further dated call options is bullish, and it's normally bullish in crypto. So when it was bearish, that was an odd sort of anomaly. It's normally bullish. Like, you're normally going to see that kind of skew, and it's not going to mean like, oh, long it here now. So like 180-day skew is back in positive territory. Heiken Ash candles, hybrid Ichimoku cloud. Yeah, I don't know what you're talking about unless you're talking about in silicos, trips, tools. I even said to him a while back, I was like, Trip, I think I'm just going to use your suite because I'm really tired of trying to, what happens is when you're trading, if you're like me now, you're focusing so much on the low time frames. Again, I've always gone over this concept, like you only have so much bandwidth. You can't spread yourself too thin across multiple approaches. So, what I would be trying to do is be a generalist, and I would be trading the low time frames and then also trying to get pinpoint entries on swing trades and position trades, and you just can't. Like, it's way too much to manage. So for myself, I think it's probably, and this is why I'll use something like the Hull or longer moving average or just major market structure. It's kind of like, all right, these are very glaringly obvious signals. I could take them with a fair degree of confidence. Like if we trade back above 35.5 and we're treating it as support, like I'm very confident at that point we're going to trade up to 38. I probably could have got a better entry if I really, monitored it on the lower time frames and looked at maybe a 15-30 minute footprint and refined it a little bit. But you can't do that. You can't try to be the best at every single approach and try to be a jack of all trades. So his tools are really useful for swing traders, and that's one thing that I'd like to be a lot more passive about, again, is swing trading and just not really focusing on it unless there's a very obvious signal to get involved. And I say this, and this is newer, and it's because we've had a major change in market structure. Like, this is not me suddenly deciding, just to clarify, it's not me, into 15 years into my trading saying like, hey, I'm going to change things up. No, it's like, hey, I'm going to change things up because right now is a time when a lot of people are going to be giving stuff back to the market or money back to the market because they're not recognizing that things have drastically changed. So what I need to do is use some type of signal that means that there is a drastic change in that underlying structure, drastic change in what has been, right now it's a bearish trend. And I'd rather only have a few signals for that than, try to get the pinpoint bottom entry. But I've done that maybe 4 or 5 times within this structure where I've, 5, 6 times actually, where I've gotten into longs and then just got out for a loss around break even, but you get out for a loss because I'm closing out a big position. Let's look over some other charts, but I just want to go through these. My wife's scroll. Gym selfie. Yeah, sorry about that. So I don't know if EIP 1559 will cause a big dump. It has an impact on the overall supply, which is something that is material, right? It's not like it actually has it creates a physical change in the underlying structure of ETH. Not the underlying structure, but I think you get my point. It affects the total supply. I don't know exactly how it works, right? I don't know. I'm not really keyed in on the fundamentals when it comes to ETH, but I know that there's a burn. So that overall is good for any kind of asset that's scarce. And as long as there's continued demand, that'll be great. But I think that, getting to your question, I think a good amount of that is probably, people are probably long into that already. But I don't know. I don't like to speculate on these things too much because it's not really something that I think too much about when we're very close to the event. Like, this is something that you know about well in advance, and you're going to get long on kind of the belief that it's going to be important. And to think about it now, it's kind of, it's old, right? It's a little bit late. It's closer to expiration than anything. And if ETH is strong, we're going to see it in price action. We're going to see it in the overall structure. Aggregated spot futures data, I use Agri.trade. Yeah, Lack of follow through, absolutely. Wyckoff, what do I think about it? It's really easy to see the Wyckoff pattern early, but Wyckoff takes a really long time. So if we're talking about a bottom forming, we're not talking about it over the course of a month. We're talking about people thinking that the bottom's formed over the course of a month, and then them looking back in 3 months and being like, holy shit, I thought that that was going to be the bottom. So yeah, I'm not like, I don't think that this is going to be a 2018 because there are things that are different this go around. But I would say that I am almost certain, as positive as possible, as I possibly can be, before saying I'm 100% certain, that we're not going to make an all-time high in the next 6 months. So let me just do that math real quick. So what do we? So I said end of Q3, Q4. So what are we looking at? You know, that's optimistic, honestly. Like, I don't think we're going to make an all-time high again. I would say December's earliest. So the end of Q4. And that is like my optimistic outlook. We've had a year and month-long bull market. I'm like squinting as I say this, like making one of those very uncertain faces that you would make to somebody. And we're a month into a correction, right? So we're a month into the first range after a correction. So never do you see that prices, bottoms like that. So just think about your own positioning right now. Like, you're thinking, like, if you're me, this is what I'm thinking. Hey, if I get back in spot, I'm getting the fuck out up here. And not only do I want to get out around 47, I want to get out around 46 because people are going to be thinking 47. So that's not the precise thinking that I have, but I'm front running my own structure. What I have is a good target because I want to make sure I exit. So there are a lot of people that got involved up here for the first time. And I've described this before. It's just a very simple emotion. Let me get back to break even. Let me get whole again. I'll make up my mind when I'm whole again. So it takes a really long time when the market gets this heavy with positions. So Wyckoff, I think it's going to take a lot longer than this. 90% downside for most of them. Your Dow tokens are worthless. Your DeFi, yeah, exactly. Okay. So I haven't checked out In-Silico's. I think you're talking about In-Silico's oscillators. Yeah, I don't. This is like the first time I've messed around in a while, like where I've experimented with a couple different things. Like for BlockRoots members, they know that I've talked like 2 years ago, a year ago. I was talking about how you can use Heikin-Ashi and moving averages, and you get creative, and you could scalp with the stock RSI. But I had it so refined that I'm using, when I'm scalping the very low time frames, I'm using market structure, right? I'm using market structure. I'm, have pretty much a decent understanding about how the book will adjust, right? How market makers are, what kind of movement we could expect on the low time frames when we're chopping, what kind of areas that I could expect we're operating within when it comes to percentage movements. So that I have a feel for, but even myself recently, I've been like, all right, let me try the stock RSI and see, when we're looking like, to me, when we're seeing signs of exhaustion and we're seeing signs of, crowding at the highs, let me see if I could maybe substantiate this with a, slight divergence in momentum, right? Looking at the stock. And this is only because shit's choppy right now. You have a lot of time to mess around and experiment. But I know In-Silico makes awesome tools. Yeah, so I think a lot of DeFi is I think 95% of DeFi is going to be just like everything was in the ICO boom. A couple things will continue to be, perform well, but majority will not. All right. Okay, so it's a deflationary upgrade. That's right, right? So the supply changes. But I don't know specifically how it works, so I didn't want to talk about it because I sound like an idiot when I talk about something that I've just read a brief summary on. I'm watching SNX and Aave as of today. Yeah, perp. I was in perp, out of perp, in perp again, out of perp again, and it's one of those things. I got in perp at like, I don't know, it was last week. I shared it at like around 4 something. Got out at like 6, I think. Got back in, got out again around 8 something, and I'm looking at it now and I'm like, fuck, I should have just held it from 4. And it's like a trader's joke. You get in at 5, you get out at 6, you get in at 7, you get out at 8, you get in at 9, you get out at 10. Just laughable stuff. But Aave and SNX, yeah, well, I'm going to look at those charts in a sec. BTC on the smaller time frame, there's just a ton of mean reversion. It's impulse move followed by smaller impulse move that gets people excited, followed by complete retrace. Oh, Dave, I think you meant to write you've been using them for a bit, because it says, hit me up about IS sometime, Ryan. Been suing them for a bit. Okay, good to know. Cool. All right, so let's look at some other charts, because you guys know that I could kind of like drone on about the high time frames, but I really don't give a shit about them. So within a range, right, 35, 5, 36 level, that's the level right there, right? But we're at the midpoint, so this is an area where everyone's getting flat-footed. That's what this entire range has been about, getting chopped up. Let's look at ETH. Where's ETH? So ETH against BTC showing signs of strength, right? The last couple of days, that's good. It's not a chart that I really focus too much on. If you're in a bull market and you are in between whether or not you should be in ETH or BTC, right? It makes it very easy to see how they're performing relative to each other. Looking at if you're in a bull market and you're wondering where you should take profit, if you're in price discovery and you're still seeing that, for example, that there are previous levels that we're approaching on the ETH BTC chart, you could use the ETH BTC chart to potentially take profit on the USD chart. But this right now, it's kind of, I don't think it's as, it's really worth paying attention to. As much of the market, I think, is going to be hinging around BTC's relative calm, or I would say, if rephrase that, if BTC continues to break down, like that strength that we're seeing ETH begin to show is probably just going to go out the window again. But looking at ETH really quickly, again, ETH held this previous consolidation, so that's good. This low right here, it's going to be one of those trades that I regret not holding on to, because I was in it for the reason you should be. It's a vertical move down to a single tap low, consolidated much of the time well above it, vertical move down for the most part, swing failure, right? Awesome swing failure setup, and I said my target would have been 26. So we got to the extent of around 23.85, back within this weekly level, right? So just zooming out again, so back within that weekly low. But I think that you want to see that you are trading back within these daily lows right here. You might have some lower time frame trades that present themselves, or some intraday trades that present themselves if we're able to close back above this level. So that's back above 22.77. So figure like right around 23. And I never really, I don't really like to say a precise price, because it's never that way, right? It's always a zone. But one thing that I would want to be mindful of right now is, and you might be wondering, like, why that level? Why say that you don't care about a line in the sand, but be that precise with what you consider to be bullish, kind of, when we're kind of like knocking right on the door here? Because, this high that did end up failing, took us all the way back down to this weekly low. We've taken out this high so far. We're back below that high, so this could very well end up as a swing failure. And I think a lot of this, again, hinges on BTC, right? So if BTC breaks down from here, which direction do you think ETH is going to go, right? This is going to be the most obvious swing failure. So as long as ETH, is below, again, I think, an area to use is 23, then it's, to me, it's not necessarily a good long where it currently sits. It's probably a better short, right? To return back down to this. This is 20,093 area, right? These lows from July 2nd and July 1st. So ETH is, it's holding up, but that's because BTC is moving sideways, and not doing anything spectacular to the downside. If BTC moves up, ETH is going to follow, right? It's going to outperform. That's just the way it works. Another thing that I pointed out on Twitter, so for those of you that are maybe unfamiliar with what I'm talking about, so I have a couple of alerts set, as you can see. I said inside day setups. So inside day setups are great for Bitcoin. In this is like 40 some odd days now. What is it, like 47 days, 45 days to this low, 47. See, I have a pretty decent memory. 47 days, if we just look back at, let's just say, just compare this range. Go back 47 days. There are twice the amount of inside day setups here as there are here. So we've only had 3 inside day setups down at these lows, meaning in this range. And that's kind of odd. For all the compression that we've had, it's not a whole lot of compression, as I said, but we are compressed within a range. For all this sideways activity that we've had, we've only had 3 inside days. So inside day this is an inside day right here. Where's the next inside day? Goes back here. That's an inside day right there. That's an inside day right there. And then that is it for, this is one more. So we have 4 inside days. Are you playing an inside day right here? I doubt it. I actually looked over that. So still, though, we have, compared to the last range we were within and compared to Bitcoin's normal price activity, or just normal activity, sounds a little silly to say price activity, not that many inside days. And inside days are great setups to take. What we do have right now is, the first week, we're 1 day into an inside week, right? But it's not a setup until this is closed. For anyone that's, just wanted to say that because for anyone that's looking at my description of an inside day, so if this is 2 days ago and this is yesterday, and this day is entirely engulfed by this day, right? So the day that preceded and can eat this day. The inside day is set up it's solidified when this is closed out, right? So there is no inside day until we have 2 days closed out. So that's an important detail, right? Because you could look at the weekly chart and think that, oh, well, this is an inside week setup. How would we play that? It's not, because we're the first day into this week. We need this to close out. But it's a good setup to take breakout trades from. It's kind of like when you're looking at a break from balance setup, right? So this was a trending day, but a majority of the value was distributed down here. Value developed down here, and then we had another very balanced day, most of the value being overlapped, and it gives you a good opportunity to play a breakout if you accept outside of this, where majority of this activity was isolated to. Same sort of thing with an inside day, but it's a little bit more crude or primitive because it's just based on 4 data points. Let me just go back to the chat real quick. I wanted to look at SNX and Aave, right? Inside days analog for candlestick is Harami. Nice. Okay. Harami means pregnant. Oh yes, that's right. Okay. That's right. And some of the best inside day setups are doji candles. So when you have 2 back to back like this, something like this, and this is called, God, I don't remember any of this stuff, but this is called it has a name. Man, old price action book. Let me see if I have the book behind me in a stack of books. That is called, right next to me, I have a bookshelf behind me, and then I have on my coffee table, I have a ton of books that are just stacked. It is not a double it's a double doji break, I think, but there's another name for it. I can't think of it. Good books by Bob Volman, if you want to learn about price action. So Bob Volman, I'll put that in the chat. No, it's not a spinning bottom to top. Hold on one sec. This is gonna bother me if I can't find it. One sec. We're gonna figure out what the name of this is. Shit. Maybe I'm just remembering incorrectly, and there is no name for it. Combi. No, that's what it's called. It just came to me. It's called I think it's called a Combi Breakout. All right, so let's see. We're going to do a trading stream again, hopefully tomorrow. I don't know if you guys can tell, but these high time frame streams, they don't really interest me too much. Let's see, SNX. Yes, lots of time to read over the summer. Yeah, no, SNX, Aave, both really strong moves, kind of following comp, right? Comp is at $500. Jesus Christ, when I think about the fact that I was short comp back here. I was short comp at around, this was around 30, no, excuse me, this was around 350. Or no, slightly below that because it was below this high. So I was short comp in the 330s to 340. Thank God that I got out of that because this is, I did not expect this to happen. So it looks like there's maybe some follow through that's taking place in DeFi blue chips. I mean, if we look at, let's go to templates real quick. Let's go to DeFi, and we'll just look at the last 2 days. SNX, Comp, Aave, Sushi. So yeah, some of your blue chips performing exceptionally in the last day. What do we have at the start of today? One sec. Let's see. SNX, Aave, Comp, Sushi, Kava, and then from there it's flat. But all the, what do we have on still? VWAP. The one thing about SNX, so SNX and Aave, I mean, there are a lot of bounces right now, but God, it just makes me think of the bear market. There are a ton of bounces, and they're all just exit pumps. So with Aave, for example, like I'm not really looking at any of these right now. So, I mean, a big pump like this, it's almost like if I look to the chart and we have a pump like this, I'm going to be a lot more geared towards just expecting that this is going to be gone if I suddenly, forget to look at it for 24 hours. So it's, the move is done kind of thing. This was the area that we contended over for months, right? This is the big breakdown, retest, bearish retest. So, I mean, still though, I would need to see that we get back above that 350 level, right? As much as this looks like, as much as you could say, like, all right, so if we end up here, you might look back on this and think that this is a very obvious swing failure, right? With a higher time frame target of, these highs. But the area that was the most important area on this chart is between 350, that weekly low, and these lows, right? So figure we're halfway between the 300 level and that 350 level. And in these conditions, right, I think that you need an abundance of evidence to support the case of getting long, right? So ultimately what I would say is that either support above 350. So if we're back above 350 and we're finding support, and I don't mean a candle that squeezes above here. I'm talking about daily development above there. If you have daily development back above these high time frame levels, you don't have to worry so much about the precision of your entry. What you should be grateful for almost is the confidence that you'll have in getting anything around it, right? So for example, price rips up above here, we get a pullback to this weekly support level. Maybe price takes out the low, gives us a sign of strength, right? Reclaims it, and we're sitting and we're able to hold back within this range. At that point, you're going to be very confident, right? At that point, you might make a case for much further, a move that has a lot more legs. So you don't have to sort of fight over the entry, whether it's at 340 or 370, right? You have the confidence at that point that we've developed support up there, and that you could expect that there's a high probability you're going much further. So this right now is something that I don't really want to pay attention to almost. I'd rather see, all right, are we going to come back down and test this 250 zone, right? Are we going to come back and retest the structure that we put on the way up, right? You can sort of see there's this little cluster right here around 250, sort of 260. And I anticipate that we'll be doing that, right? Don't be surprised, the same way in the bull market, how people long the highs, how many people short the lows. So you're going to have, and this is just, if, guys, say we moved on for a bear market for the next couple months, it's not going to be like that, right? It's going to be like that, but it'll be like this, right? So I will be damned if I buy any highs in alts, because that's just asking for punishment. Dry mouth. I haven't been I was at the tail end of my coffee when we started. I need a water or something. You're buying into resistance, so these have a lot of work that they need to do, a lot of work. A couple other alts that I'm focusing on, as you can see, I have alerts set on KSM. I have alerts above 250 and below. This is like 170 area. What I would look for is, the alert allows me to not come to the chart until we actually put in some, we actually cover some ground. And that might lead to something where we break below this low, and then maybe I'll look for a reclaim of this level or target of these highs. Or if we're able to trade back above this level, and again, to find support above that daily swing low. FTT, similar idea. FTT is kind of like ETH right now, right? Came back down, major swing low. Has less of a move up right now though, but your daily support level is around 30, that I think is the most important. So if you're above 30, right, then you're probably looking at covering ground much higher up. Perp looks great, but now perp is finally almost all the way to the target. So very strong move by perp. So yeah, a ton of bounces. But I will not be buying. You could buy the highs in a bull market, but the kind of move we've had right now, super dangerous to buy highs. So I think I'm like brain dead during the stream, guys. Sorry, I did not have my vitamins today. I didn't get good sleep last night. That's why. If you ever hear me say a lot of ums and kind of be someone who's bereft of words, not sounding too sharp, it's probably because I stayed up really late, and I stayed up way too late last night. I had coffee too late in the day. But what was I going to say? Now I've completely lost my train of thought. In a bull market, yeah, be willing to buy towards the highs. But right now, you need a lot of evidence. Right now, Bybit is, let's see, is Bybit in the lead? Yes, Bybit is in the lead. That's always a good sign. Rolling at the VWAP. Just go through the chat real quick. Yeah, I like doing the trading streams a lot better too. I don't know. I feel, we have a public YouTube, and there's a lot of people that they don't have. I think that it's tough to go on YouTube and find a good channel. There's only a few, and I hate to sort of self-congratulate ourselves or to be like that, but I think we have a good YouTube channel. So I like to do the streams, so I think people benefit from them. But it's like, there are times when we're doing, okay, so for example, the last month, when we do streams where we talk about anything about the high time frames, it's kind of like we're just repeating the same old shit, because nothing's changed. So The trading streams, I think, are a lot better. The other night, though, Friday night, we hopped on with the trading streams. I swear, guys, I started 10 minutes into the stream. I was like, how do I end the stream fast? Because there's nothing going on. Like, I'm not going to just take a, do a trading stream and then force trades for the sake of clicking the button during the stream. One thing that I've realized recently is that I thought that I sized down enough, but it hasn't been enough for these conditions as of recently. I mean, I was trading with like half to a quarter of the size I was trading with during the bull market, and even recently I've found that it's just liquidity is drying up a little bit more as we go through this range. And you have to adapt when things like that in the environment change, because otherwise it's just like I'm paying stupid amount of slippage for some of these positions because in my scalps I'm tagging on at market. And I'm thinking yesterday, I'm like, do I have to go back to like trading a tenth of the size that I normally trade just so I could trade, but take advantage of these small, shitty conditions? Or should I just completely step out of the market and set alerts and only get involved when the market like pulls me back in? I really enjoy trading. The lower time frame is kind of like, I don't know, it's a game of chess almost, and I really enjoy figuring it out. So it's very difficult for me to step away for any prolonged period of time. I guess you can't say it's chess, right? It's like poker and chess, because chess is pretty formulaic, right? You make certain moves, and if you're playing a beginner, you're guaranteed to win almost, right? If you're a pro. But trading is obviously not that formulaic. It's a bit more fluid. Let's see, any other things in the chat? Easy, just FOMO the resistance and press the other button. Paolo. Hope I'm not massacring your name. It has all of the, like, one thing that it will say is like if we do something like this and we're up here, we're all going to say like, that was such an obvious bottom. But the problem is, we have a lot of signs that we would normally want to look for. We have backwardation, a few times. We have basis being almost, completely flat, very neutral, funding being negative a lot. A majority, sound like a moron during the stream, funding being negative a lot. We have all the indications in positioning that, it could set up to be a bottom, right? Compared to previous bottoms that we've had, there's similar evidence. But the thing that you need to see is some kind of strength in price action. The trouble is, like, when we have a structure like this and the longer that we move sideways, it's almost like the longer that we move sideways and the tighter we get, the less we can expect that it's going to be easy to spot the change and get involved, right? Because, you might do something like 2019, or was that 2018 down here, 2019, where it's kind of just this grind, right? This low volatility float, and then a candle out of nowhere that covers all the levels, right? So the longer they move sideways, and let's say we compress even longer, it's very unlikely at that point that then we just go bloop, go over the top and then, buy this retest, you have a great trade from here to here, right? The longer that we compress, the tighter that we get, the more likely that you end up with something. Whereas let's just say, for example, it does, let's just say it compresses like this, right? And let's say that this does break to the upside. It's very unlikely that you go from, bottlenecking like that to expanding and then just, retesting this. It's a lot more likely that you compress, and if you're tightening up, incredibly, right? I'm just going to try to draw it to give you the idea, right? Say you're forming this sort of volatility funnel, that when you do break out, this level is going to be nothing, right? You're just going to do something like this. Which puts you in a position of, oh my God, do I buy the high at this point? Is this to break out in the making? So it's never that simple. I think that no matter what, let's say that occurred. Let's say you get this grind down here and out of left field. So if we have something like this, if we end up breaking down again, and then we have a candle like this into the midpoint, not buying that still, right? Too dangerous still, right? Midpoint still intact. If we have a candle up at these highs, and this is just completely hypothetical, it's kind of silly to go over it because we're talking about a candle that's going to show up out of left field that covers $10,000 when we haven't been able to cover, you know, $500, right? But if we have something like that, again, into resistance, we'd look for a retest around 35. If we have this candle that just vertically moves above these highs, I need to see the retest or some kind of pullback back down to around 42, 41. So at this point, it's kind of like it's not very cut and dry, right? You want to see a sign of strength in price action, but you know what you want is not necessarily what you're going to get. So there is a tendency for people to get positioned early because at some point it really pays to be positioned early if you are on the right side of that trade, right? Because it's going to happen very quickly. It pays very quickly. Excuse me. That's what I meant to say. So, but I would not want to get involved unless I see certain criteria sort of met. I think that's going to wrap it up, though, guys. I am a little bit brain dead this stream. I'm definitely going to try to get some sleep tonight. And yeah, I was up all so I had coffee late in the day, and then I was up all last night, kind of got stuck down this rabbit hole looking at abstract art because at the new house, I want to have a completely different office. My office right now is very soft, earthy tones, wood bookshelf, warm lighting. I have a painting behind me. I have a TV to my right. But in the new house, it's, everything's already new. So walls are painted. It's kind of like, I think it's like a gray blue. So I want a completely brand new office, new artwork. So I got sort of stuck down this rabbit hole last night, just looking at abstract art. I really like, I think it's, is it abstract expressionism? What's his name? Jackson Pollock, stuff like that. But anyway, didn't get good sleep. I will do a trading stream tomorrow, though. So we'll do a trading stream tomorrow because tomorrow traditional market's open. So figure the afternoon we'll do one. And it won't be a silent one. So the other ones were silent. But if nothing goes on, like I'm going to want to talk. But it'll primarily be focused on the low time frames and trading. And that's it. Until then, everyone have a fantastic evening. Thanks for our subscribers, or to our subscribers. God, I can't talk. Phemex, and yeah, until tomorrow.